How much are you worth in your job per hour? It's something that as Forex traders, luckily, we don't really need to worry about, and I'll share more with you right now. Hi traders, it's Andrew Mitchem here, the Forex Trading Coach, and today is Friday the 11th of July. And I want to talk about the differences between most people having a job where you get paid so much per hour and Forex traders, because we're a little bit more like self-employed people where the hourly rate is not such a big issue. You see, when you have a normal, let's say 9 to 5 job, you get paid so much per hour, and that hourly rate can depend on certain things like what type of job you do, how far up, let's say, the corporate ladder you are, or whether you're doing a technical job or a manual job, how much experience you have. It could be to do with what part of the country you live in, what part of the world you live in. There's different hourly rates for the same job, but in different parts. And so it's very much dependent on that. And the good thing is, I suppose, you work X number of hours, you get X number of dollars or pounds or yen or whatever currency you get paid in. The downside is, of course, and that with most jobs, is that if you want to increase your wages and have more money, that is what your goal is, then you generally have to work either more hours to get more money per hour or over the course of a week, or you have to work yourself up through to a higher paying job, which can very often mean more stress, more time away from your home and your family and that type of thing. And so having a high paying job is not always the very best thing in terms of a high hourly rate. And so the beauty that I've always been attracted to the Forex market, one of the main sort of in terms of the benefits of the income side of things from trading Forex, is that the quality of the trades that you take are the thing that really makes the difference. It's not so much how many hours you spend staring at screens and charts, reading through forums or anything like that. That really doesn't have very much of a bearing at all once you understand how to trade. It's not to do with, I've spent 10 hours today staring at charts, therefore I'm likely to make X number of dollars or percent. That doesn't have any relevance. And I'll give you some examples from just a webinar that I held for my clients yesterday. It was almost, it's about a 2.5 hour webinar. It was a very long webinar, really good one with a lot of great questions asked and some trades taken, and they're just brilliant ways to learn to trade in real time. It's the live webinar where I trade on my charts here behind me in front of my clients on a live account and take trades in real time. But I'll give you some examples. I had a client who took a trade on the 30-minute charts. It lasted for 3 bars, so it's 1.5 hours, and he made a 4.4 return to risk trade on a 30-minute chart. So that if you, let's say you were risking half of 1% per trade, that's a 2.2% return. Now, it lasted 3 bars, which is an hour and a half. Doesn't mean to say he was sat there watching it for 3 bars or an hour and a half. But, it's just put the trade on, potentially leave it. You might want to monitor it. But even if he sat there for the whole hour and a half, which he didn't, but even if he did, that's a 2.2% account return just in that time. Now, there may be a number of hours, there could be several days between a quality setup like that. Again, who knows? It just depends on the current market conditions. Another example, I had a trader on a 1-minute chart say to me, "Hey Andrew, I'm taking a setup." It was a sell trade on the British pound US dollar on the 1-minute chart. And he made a 1.75 to 1 risk to reward trade in 7 minutes. So with 0.5% risk on that trade, that's almost a 0.9% account gain, almost a 1% account gain in 7 minutes, just by identifying the correct chart setup and taking the trade. At the other end of the extreme, I had a trade that I showed my clients that was taken on the weekly charts, and it took a number of weeks to actually come through and to hit full profit. It was a sell trade on the Euro Canadian dollar from a number of weeks ago. But that trade, even though it was on a weekly chart and it took a number of weeks to fulfill in terms of get through to its full profit, it didn't take me any more time to place that trade. It wasn't harder. I didn't have to go to work anymore. I didn't have to stay late at a job, work weekends or whatever it might be to take that trade. A number of weeks ago, I placed a sell limit on the euro Canadian dollar, put it on there with an expiry of 1 week. So if it didn't fill as a limit order within 1 week, it got expired. It did fill, and it's taken a number of weeks to actually come through and hit full profit on a sell trade. But it didn't take any extra work. But I still made a 2.2% gain on my account from that one trade. And being a sell trade also in the euro Canadian dollar, it paid swap as well. So I was actually getting paid extra for each day that the trade remained in the market. But it was a 2.2% account gain for just maybe a couple minutes of work back when I identified the trade setup and placed the trade. So it just goes to show what can be achieved, and by placing quality trades, high quality trades, not the number of trades. That taking 20 trades a day doesn't really mean a lot, unless of course you're getting most of them right, but it's all to do with taking the quality of the trades, the high return trades, the high probability trades. And you get that right, and the returns can just be fantastic. Let's say you made a 1% gain on average per week. Even without compounding, it's pretty much a 50% gain throughout the whole year, assuming you're trading 45, 50 weeks of the year. But even without compounding, it's 50% gain per year. And that's a pretty phenomenal amount of a return when you consider other options that you have out there as an investor. Yet if you can do that on a $1,000 account, you can do that on a $10,000 account, or a $20,000 or a $50,000 or a $100,000 account, or a $1 million account if you had $1 million, or you traded $1 million in a fund. So of course it's slightly different in terms of the whole mental approach of the higher figures in an account, but in theory the actual placing the trade doesn't take you 10 or 100 or 1,000 times longer. It doesn't make it 1,000 times harder. It's the actual placing of the quality setup trade that's the vital thing. So that's one of the many, many benefits to us as Forex traders. Lastly, I just need to mention the big mover of the week yet again is the New Zealand dollar. Against the US, it's now gone over the 88, the 0.88 level. It's just stalling a bit yesterday. Potentially today, Friday, might just come back slightly, but overall it's still in a huge uptrend. It's now broken through the 2011 swing high, and it's now currently at around 88.20, I think, when I last looked a few minutes ago. And so very, very strong movements up in the New Zealand dollar, as I've been sort of predicting for a long, long time now. But you would have seen on my daily strength and weakness analysis, I've been looking for strength in the New Zealand US and New Zealand CAD for a lot of the times over the last few weeks, and it's just gone from strength to strength based on the quality of the economy here. High interest rates here, which for us borrowing is not always a great thing, but but in terms of the quality of the environment as a country to live, the political stability, the safety, the employment, everything about New Zealand right now is on a high and is going extremely well. So that is related and reflected, I should say, in the economy and therefore in the New Zealand dollar as a currency. So whether it carries on through that 88 level and up to 89 and 90 against the US, it probably will. It may not initially. It may just have a bit of a pullback, but it's candle patterns that we need to see in order to give ourselves a new entry, looking for any potential long trades there. So just wanted to put a bit of a plug in for this great country, but it's all reflected in the prices. So have yourself a fantastic weekend, and I look forward to bringing more information to you this time next week. Bye for now. This is Andrew Mitchem from the Forex Trading Coach.